Welcome everyone to another episode of How to Make Money in Stocks with Investors Business Daily. Up front, we want to let you know that there is a leaderboard webinar next week, Thursday, October 15th.
And it will be at 4 o'clock Pacific time. And if you're not a leaderboard subscriber, you can take a free trial and then you can sit in on the webinar, of course, with our executive editor, Chris Kessel.
And we'll show you how to do that by visiting our website, investors.com/investing show. We also want to let you know that we've revamped our entire IBD video section.
It looks really good.
It looks very nice, so be sure to come check that out and find all the different videos that we have available.
And this week on the show, we are going to continue to talk about chart patterns, and this week we're going to tackle the flat base.
That is a key one. And we also want to let you know that Amy's actually going to be on the road up to San Francisco for a Level 2 workshop on Saturday, so we recorded some of the segments for this show ahead of time. So let's jump right in and I'll take a look at the market. The index has gained some traction from the uptrend that started last week, so let's take a look at three positive developments. First, the S&P 500 and NASDAQ have posted several bullish reversals over the last couple of weeks, and the S&P got decisively back above its 50-day line. Thursday was just one example of how the indexes have traded lower during the day, but then reversed higher to close at or near the top of the price range. Several of those moves have come on above average volume, which shows large investors have been regaining some enthusiasm. And look how that's the mirror image of the bearish reversals that we saw in August and September. Now, the NASDAQ showed similar action, but it came up just short of reclaiming its 50-day line. So see if it can move above that on good volume next week. Another positive development is that we've seen some stronger breakouts. On this daily chart, you can see how global payments struggled to break out of this cup with handle, but then bolted higher on October 7th. It added to those gains on Friday and is now extended beyond a proper buy zone. And look at the volume. It was well above average on Wednesday, Thursday, and Friday as it made that move. LGI Homes is another stock that has shown the kind of breakout that we like to see. It cleared this flat base in early August on massive volume and has continued to climb higher. This pullback to the 50-day line, followed by a nice bounce on heavy volume, gave another opportunity to pick up shares. After seeing a lot of stalled breakouts in recent months, it's encouraging to see that kind of action. A third positive development is that we're seeing a lot of IBD 50 stocks and other leaders setting up bases, and that may mean they're getting ready to launch new runs. O'Reilly Automotive is just one example. It's working on a flat base and has shown tight weekly trading right along its 10-week line. And speaking of tight weekly action, take a look at Chipotle Mexican Grill. It doesn't get much tighter than that. So while it's also working on a flat base, the question is, which way will it swing? Will it spring higher or unravel and head south? Facebook is another example. Now, none of these are recommendations. We're just pointing out some institutional quality stocks that may be setting up to launch a new run. And that brings us to the elephant in the room, earnings season. Q3 earnings will likely make or break the overall market uptrend and determine the success or failure of the many bases that are now being formed. So make sure that you have a defensive sell plan in place for any new buys that you make. And there are a number of stocks to keep an eye on. Again, these are not recommendations, but here's a partial list of stocks that are currently forming a chart pattern and are scheduled to report earnings within the next couple of weeks. As you go through these stocks and others in a similar situation, you can use a buying checklist and a base checklist to review their charts and the fundamentals. And you can download those for free on our website, investors.com/investing show. So the bottom line is opportunity may be knocking, but it's important to know what you're looking for. And you need to have plans for both buying and selling. So keep that in mind as you refine your watch list. And if you need help, visit our website for more information. So last week we talked about the cup with handle and how it often launches big moves in a lot of different stocks. So today we're going to talk about another pattern, and it's one that often follows the cup with handle to kick off another stage of a big run, and that is the flat base.
Now, this base is often a secondary base. It's formed as a stock is taking a little breather before moving higher. It's a tight and shallow base, and interestingly, it is the most common base pattern that we see.
So let's check out some of the key criteria for a flat base. Now, like all patterns, first you want to see that prior uptrend because remember, the basic concept of all patterns, all bases, is that the stock runs up for a while, then, like Amy just said, takes a little breather, and it sets up a new stepping stone to keep climbing higher.
Now, each base has certain characteristics, and for the flat base, we want it to be 5 weeks minimum in length. Now, remember, the cup with handle was 7 weeks in length. That's the minimum. The depth in the flat base is no more than 15%. It's a little shallow correction.
And last week we mentioned how the handle within the cup with handle is very useful because it shakes out or it weeds out those weaker holders. The flat base also has a shakeout, but instead of a fairly sharp and sudden shakeout, it's more of a slow grind because as you can see here, the stock kind of goes nowhere for quite a while, several weeks, and then people just give up and get out.
Oh, but that's the wrong thing to do, right? Okay, the flat base is like a snake that is coiled and it is ready to strike. That quiet action is actually very constructive because there's not a lot of price being given up. It's just in this tight little area before it possibly makes a big run.
And that flat trading range reveals where the stock is finding support and also where it's hitting resistance. And that brings us to the buy point. For all bases, the entry price is based on a former area of resistance. And we want to make sure that the stock can punch through that ceiling of resistance before we jump in.
So the buy point in a flat base is 10 cents above the high on the left side of the base. And when it clears that price, you want volume to increase at least 40 to 50%. And what this shows you is that pros are picking up shares. And the higher the volume, the better.
Right. 40 to 50% is your minimum. Sometimes you'll see 100%, 300% rise in volume. So that tells you, like you said, that the big investors are jumping in. So as Amy said, the buy point is 10 cents above the peak on the left. The buying range is up to 5% above that ideal buy point. But for best results, you want to buy as close to the ideal buy point as possible.
All right, now here's a stock that launched a beautiful move out of a flat base structure. We're not going to tell you what it is.
Not just yet.
Not
anyway.
yet. But we want you to guess. Does anyone out there have a guess?
Okay, so as you're thinking about that, note how prior to forming that flat base, the stock broke out of a cup with handle a couple of months earlier. So it had the prior uptrend after the cup with handle breakout, and the flat base gave you a chance to add to your position or to set up a new one.
Now stay tuned because in the next segment, we will reveal the mystery stock that had the flat base. And we'll show you what happened after that flat base breakout.
How would you like an edge that helps you pick winning stocks faster? An edge that is proven to outperform the S&P 500 by 76% since inception, and that you can take advantage of today without spending a dime. More on that in a minute. Each day, our top market team at Investors Business Daily scans our proprietary stock lists and screens to find superior stocks with the most potential for big gains. They analyze these stocks every step of the way to show you basis, buy points, sell signals, and the right time to take profits. It's about as close to hold your hand investing as you can get. Introducing Leaderboard by Investors Business Daily. For a limited time, you can try all of the premium features Leaderboard has to offer for a full 14 days at absolutely no cost to you. You'll receive unlimited access to all of the time-saving research, powerful investing tools, the leaders list, cut list, and expert analysis you need to develop a winning investing strategy. And it's all 100% free for your first 14 days.
All right, Amy, as promised, it's time for the big reveal to talk about which stock we were just looking at in the earlier segment.
Okay, drum roll. Yeah. Did anybody out there get it? This was Xerox back in 1963. And what this demonstrates to you is that base patterns haven't changed in all of these years. Now, decade after decade, they're launching pads that can lead to some enormous gains. And that's why we want to pay attention to them.
And if you learn to spot just a few patterns, the ones we're talking about in this series, the cup with handle, flat base, double bottom, then you'll have what you need to get in early on these potential winners. And look at the move that Xerox made. It ran up 660% from April 1963 to April 1966.
That's a big move.
That is.
So when you study stocks from the past, always ask the why.
Mm-hmm.
Why did they make these big moves? Now, first, this was a newer IPO, and we know that these newer names can provide some great opportunities, but not all IPOs work, of course.
Sure.
But this one had game-changing technology at the time.
That's right. It was the rise of the photocopying machine, and it revolutionized the business world in the same way that the iPod and the iPhone revolutionized music and phones several decades later. And what's also interesting is that after all that time, Apple ended up forming the same kind of chart patterns that Xerox did when it made those massive moves back in the 60s.
Now let's take a look at this. This is an Apple weekly chart 2009 and June 2010. Apple corrected sharply along with the rest of the market in 2008. But in March 2009, it began moving higher again as we started a new bull market run. And it formed a couple of flat bases and it launched a massive move.
And here's the flat base that launched Apple higher in the early stages of that new bull cycle that began in 2009. So here's the prior run-up. And then note how when it pulled back to form that pattern, it found good support at the 10-week line.
And then it moved up several weeks in a row, and all of those were above the 10-week line. And then it formed a 3 weeks tight, and it rose some more, and then it formed another 3 weeks tight. And this is when the weekly closes are with 1% of one another.
And as the market got a little choppier and went into an intermediate correction, Apple pulled back to form a couple more flat bases, and then it took off again. And Apple is just one example, so let's take a look at a few more.
All right, this is a weekly chart of NXP Semiconductors. Now, this broke out of a cup-shaped base in May 2013, and then it went on to form a flat base in October 2013.
And the run-up from the cup with handle to the start of the flat base was about 25%, and that's very typical. Many stocks will rise 20 to 25% from a breakout and then start to form another base.
Now, this is showing you a big run-up here. These base patterns provide fantastic launching pads for some nice gains. And along the way, notice the tight areas in between the bases that NXP formed.
And don't forget the fundamentals. We're talking right now about the chart, but just like with Xerox and Apple, NXPI had the kind of earnings and sales growth and innovative products that will end up driving a stock higher.
Now, NXP creates solutions that enable secure connections. NXP is driving innovation in the areas of connected car, security, portable, and wearable devices. NXP has operations in more than 25 countries and posted revenue of $5.65 billion in 2014.
And especially at the time of that run that we just saw, NXP was getting a nice boost from the iPhone and Apple Pay. And that's because NXP provides the near-field communications technology that powers that kind of mobile payment system.
Now, next week, we're going to go over the double bottom base.
Right. And in the meantime, you can see more free videos and lessons on chart patterns at investors.com/investingshow.
I just want to say a big thank you to everybody that came out to the LA Level 1. We had a nice big crowd, and people were so nice about the investing show. So thank you for tuning in. And if you have suggestions, you can always email us and let us know, or your thoughts or something you want covered on the show. Also want to make sure that you tune into that leaderboard seminar, which is next Thursday. And if you don't have a trial of a leaderboard, you can take a free trial so you can tune into the webinar.
Right, and that is a webinar that's online, so you can check it out from the comfort of your own home, and you can see how to sign up for that at our website. And also, quick reminder, this is the final 2 days of open access where you can come to investors.com, try out the different premium tools, and try them out. And then if you like it, then you can get a really nice discount on this subscription. But it all ends tomorrow, Sunday, October 11th. So be sure to check that out. And you can do that at investors.com/investingshow.
Okay, see you next week, everybody.